Hey traders, Nick Shaheen here recapping the week. Ugly way to end the week, ending 4-6. Scoreboard was definitely bearish, 2.5%-ish, give or take, 2 to 2.5%, depends on what index or ETF you're looking at. Bad day. But other than the scoreboard, it was disappointing for the Bulls because of what it was. I mean, first of all, last night, I thought we were going to have a bad day, so that's not the surprise. The surprise was that we shrugged it off. We even had really important stocks go green. The lows to highs were incredible. Micron, for example, was like the crappy stock of the week, going to 35 from 50. That's the call on the analyst. Turned green. Facebook was green. So we tried. We were there. The lows and the highs are far apart again. But so that's the disappointing part. They had something going. So what happened? Oh my gosh, what didn't happen? We had a slew of headlines and appearances. We had Powell. Before that, we had Mnuchin, who was sent out, I'm sure, to do a TV interview with CNBC to help the markets, but it worked against him because he's usually good with that because he's a market guy. But they had 5 CNBC interviewers, all top 5 dogs there. And they were bombarding him with questions. What about this? Do you want to call it tariffs? And it was a semantics. You want to call it tariff war or whatever they call it. So it's like, God, the point is he was trying to make the same point over and over and over again that we're trying to negotiate. So they were like, are you negotiating or you're trying to negotiate? And he can't flat out say this or that. I mean, his hands were tied on how he wants to answer. He sounded shifty and avoiding, but it was like, a bunch of kids. Hey, you promised us to be clown at the party. Where are the clowns? I don't see any clowns. Anyway, it was a mess. So the market said, you know what? Forget it. I'm going to sell into the close because I don't know what's going to happen over the weekend. We can have a China headline saying we're going to retaliate. But so they sold, which is understandable. They sold into the close. I could break it down. I will in a minute. But opinion on China headline, I don't know if they're going to come out with specific retaliations because what they said today in response to the last night announcement from President Trump on the extra $100 billion is that they'll be ready to announce retaliations if these get implemented. And since the president said he's looking into studying, he asked that they would study it to see the impacts. So it's not like it's a done deal. None of this is a done deal. They have a 30-day, whatever long comment period, I think they call it. So I don't think they're going to say anything unless our president decides to say something. Anyway, so headlines. That's the point of headline trading. So now we looked at a bad ending to a week. So how did the week look? The week wasn't that bad as far as scoreboard. It wasn't disastrous. In fact, also, so from the price action, okay, the fact that let me see if I can zoom in. Okay, so here is today. Here was yesterday. And here was the day before that. The day before that was the really bad day that we shrugged off and went green, and we had follow through the next day. So we thought, okay, target kind of met on this little guy. And today was going to be another continuation but we were thwarted by the headlines yesterday. But here's the good part, is this guy right here. So the low was not as low as yesterday. So we're kind of like setting higher lows. Not convincingly so, but higher lows. And look. This is a big ugly candle right here. Look, this is a big by the way, these are the Febtobers. The February lows closing. This is the closing February low, which we closed below here according to this chart. People would argue against it. This is the February low absolute, right? 2532, whatever they said it was on the SPX. This is the SPY. So that is constructive, that we're off of these lows that we're talking about. All right, so that's the good thing. And I can show you a scoreboard on the week. But first, I want to look into next week as far as what to expect. Okay, so next week we have a lot of important scheduled things, and we're dying already. The bull is dying by 1,000 cuts. We have so many things we want to combat, so we're forgetting about some of the other stuff. For example, next week we have inflation reports. But first, I heard something about a China-U.S. meeting, kind of like a touch-base negotiation. If indeed that happens, forget everything else. That is the most important thing. because tariff wars, we are the two fighting parties. We're coming to meet. I don't have a date. I don't have a time. I don't have a scope or anything. But whatever happens around that date is what's going to happen. So usually when you have an event this important, fear lingers until then. Think of the olden days when we had Fed event. You know, nobody does much until the Fed event. So they go to range trading until then. But in this case, we have so many other headlines flying. So what I'm saying is fear is going to be high. So if I'm worried about my portfolio, I can buy calls in the VIX or the VXX out in time, say for April, and those should be good protection, and they're not going to die. And if they do die, it's because price moved higher in my favor. So just like buying insurance, you don't cry over losing the insurance premium the month you don't crash. It did its job. It let you own the car and sleep at night knowing that your car is protected, your asset is protected. Same here. If I buy calls in the VXX or the VIX, I'm protecting my whole portfolio. Or conversely, if I decide to, instead of buying calls, I buy puts, I'm covering them. So if I lose a little bit on my insurance premiums, I don't cry over it, because in this case, I'm telling you that it's because price rose, not because just time passed. Because people are going to be fearful, get it, for the duration of that period. All right, so, and it's a rental. I don't have to, I mean, I can give it back. Unlike real insurance, you can't give it back. So that's the most important thing. I don't have a timeline on it. We can do homework. If you find out, please let me know. Okay, other than that, we do have inflation scheduled, which is important. This is the most important for Fed Powell. Today he spoke, and again, I'm convinced that he's looking at the CPI, not wage inflation. So the wage report today, I forgot we talked about that. I forgot to talk about it, but it's non-event. So if the CPI or the PPI or whatever is scheduled to come out, any inflation numbers are hotter than expected, especially much hotter than expected, we are going to fall. Because then they anticipate, oh my gosh, he's going to do 4 rate hikes. Today, Fed Powell said patiently. Okay, he said, we're looking at everything patiently. But then they pressed him on the fact, will you change your track, the hikes, according to tariffs? He didn't say yes. They wanted to hear yes, because then that would mean that he would back off of hiking rates if things get bad because of tariffs. All he had to say is like, it's a factor. I'm looking at everything. That's you know, he wouldn't have committed this or that, but he didn't say that. Whatever he said didn't sound like that, and we took another nosedive after Mnuchin. Mnuchin made it bad. He made it worse. But so war of words, and so that's another important part. And as far as something else going on, the Fed minutes thereafter. Wednesday, this is same as the inflation thing as far as weight importance, because it's the Fed related, and traders will read into every minute, even though these are past events. They want to read, was there dissent, how many people voted this way, how many people voted that way, what was talked about, etc. ECB, I believe they have a meeting, and Draghi speeches, so they have a presser too. Usually Draghi is bullish, but these days he's probably going to be bullish, them, not us type of a deal. And with a trade war going on and tariffs imposed by Trump, I'm not sure how nice he's going to be to the U.S. market. So expect some fireworks from him. And he usually moves currency markets too, which also hit oil. By the way, oil today, I think, started the downside, because if I was looking at prices at the same time, oil fell off a cliff and it started the big downside in the morning. It literally just fell off a cliff. Okay, so other than that, I think I can point out Facebook. Why? Because Facebook will have an event next week. 2 events, I think the 10th and the 11th. Zuckerberg, CEO of Facebook, is going to appear in front of our politicians, and they will surely put his feet to the fire. And usually they ask very stabbing questions and to force him to say some bad things about his company. And if he doesn't say, he will sound combative, so it's a no-win situation for him. So I don't expect great stuff from that. But today, Facebook, for some reason, went green too, and it closed better than a lot of other stocks, and definitely better than the stock market in general. So this is Facebook in general. I am cautiously long Facebook, but I'm protected through puts, so I'm not that worried about it. All right, so I kind of ran down everything. So in summary, bad Friday, but not so bad week. And next week, really important. Most important is China tariff headline, and I think there's a floating date of sorts right there, so you got to keep an eye on that. Second most important are the Fed-related things, which are CPI and the Fed minutes. Not just CPI, there are other PPI, I think it was. I think Monday we start with something, I can't remember now, but look it up, you'll find it. So expect headlines is what I'm saying. Monday pops, maybe we'll get a relief pop if nothing happens over the weekend. The selling today was my guess is that people don't want to go along into a weekend. If I'm right, Monday should be a relief pop. What happens when things pop? I fix broken trades. So if I had a trade that was going wrong on Friday, I use the pop to fix it. I don't use the pop to say, thank goodness it happened. I try to defend it one way or another. So how do I defend? You can message me, but generally speaking, I already mentioned, you can buy calls and fear factors, or you can buy puts in whatever you're trying to protect. Members know what to do there, and they know how to message me. All right, so levels, we did chat about the S&P. If you want to look at it from the ES, let's see here. Do I break it down? Yeah, I'll break it down to 2 hours. So this is how it happened today. These are 2-hour candles. You can see how we had something going and then fell off a cliff. This white zone hasn't changed for us. This is basically the SPX. These are the E-minis. And it has been tested several times. And this is the February correction right here. I'm just reviewing what we just did. All right, so here's a thought. If I wanted to go long something that doesn't have direct tie-ins to all these headlines, maybe the small caps. Why do I say that? Because it doesn't have direct tie-in to Facebook. It's small caps. And belief is that they're centric to the U.S., so tariff wars should benefit them, so they should hold up better. So if I wanted to catch a trade swing in the NASDAQ, that might be a good thing. In the small caps, IWM or RUT, whichever, or whatever ETFs you follow. So maybe that's the best way. So thesis, okay? But if the whole market is falling, small caps, big caps, not going to matter. They're all falling. All right, so how far can they fall? I tell you one thing, that there is a technical scenario now that is pretty nasty if we don't hold these lows. Here's maybe the daily will be enough. So this is a daily SPX. Now, I am not this was a good call we did today, intraday. Intraday, we had a good day in the chat room, by the way. So here's the things that I see that are scary. All right, so the white box that you've seen is somewhere around here. Okay, so if we lose that, there's a scenario that calls for this zone right here easily, if not lower. So this worst case scenario, not worst case scenario, of this particular breakdown. So what is this? This is, I don't want to call it head and shoulders, kind of a lofty. It's a neckline that's getting tested over and over. So right here it was resistance, and then they broke through it, and they had this beautiful rally. You can say they defended it here, support. They defended it big time here, support. This you can call it support. They defended it here. That's the February correction, right? Yeah, I think so. Support. So what happens if they lose it? If they lose the support, that means that because we're having lower highs, it means the bulls are tired and the bears will prevail down and they overshoot. Usually the overshoot distance should be about as big as this. I usually look to the left and see where's the last meaningful level, right? And that would be like somewhere around here first, somewhere around here next. That's why I drew these boxes. So 2360, not out of the question. There's a stopover somewhere around 2480, 2450, 2420 right there. That's probably the best balancing act right there. I'm going to draw a line here. Not a line. I usually put a box because a line would be misleading. People will start looking for, I lost it already. Okay, right there. So I'm going to do this, just to remind me we've done this conversation before. All right, so I don't want to scare anybody. This is not a forecast. This is a situation that we're looking at. This zone right here is pretty important, correct? Same type of deal. They've been defending it. This would be the first stopover and then lower if we wanted to. How about the Qs? Well, the Qs, the problem with the Qs is, the problem and a good thing about the Qs is that they have 5 or 6 huge hitters in there. Any one or two of them move the whole index. Apple itself is about 0.15%. So if Apple's up 2%, 0.3% Q impact. So if up 2%, then plus 0.3% of the QQQ is all Apple. Vice versa is correct. So be careful. Double-edged knife. If they hit all of them, they hit all of them. FANG, okay, so FANG are pretty much the Q. See? I just switched from the QQQ to FANG. You know, Facebook, Amazon, Google, Netflix. Boom. They look the same. Here, I'm just going to undo it. That's it. That's QQQ. That's FANG. So need I say more? All right. So there's that risk. All right. I've rambled enough. Nick signing out. If you have any questions, let me know.